Let's move on to the other big story that's coming in, obviously, from the banking space, and we're talking about Axis Bank. The stock has been under pressure. It's been down almost 4-5% right from the morning as the street digests, obviously, what has been a technical issue that's impacted asset quality. Now, the bank has also seen a number of high-level management changes in the past couple of years, along with key personnel leaving the bank in just the last 2 years alone. Over the same period, Axis Bank has seen strong deceleration in retail advances. Loan growth has lagged the industry and deposit growth has also remained weak. The board has approved the appointment of Mgmt as the executive director starting August. That's a development that's happened just today itself. And Ritu is here to put all of this in context for us. Ritu, I mean, it seems to be a bit of a crossroads, or should I say inflection point. This kind of change in NPA recognition norms, the exits that you described. So, how should investors digest all of it and put it together?
Well, Surbhi, it certainly is concerning for the street, and especially this top 11 churn that is underway that you were referring to at Axis Bank. Of course, the latest news is Mgmt, who's the Group Executive at Treasury, Markets and Wholesale Banking, being elevated to a whole-time director role, designated ED for a 3-year term. And that's, of course, because Rajiv Anand, who we know the long-serving DMD and whole-time director, is stepping down. But, the problem is this is not an isolated shift, really in the top management. Over the past 2 years, there's as many as 6 top executives that have exited or are in the process of exiting the bank. And the latest, of course, announced today itself is Arjun Chaudhary, who is the group executive for affluent banking, cards, payment and retail lending, who's put in his papers. Rajiv Anand, as we already know, is going to retire in August. And prior to them, you've had key group executives who've been heading retail, liabilities, audit, wholesale banking, all stepping away from the bank. And, these changes are coming at a time when the bank is already facing some fresh operational headwinds, particularly when you look at asset quality in the numbers that the bank has just reported yesterday. That shocker of a slippage, 8,200 crores of fresh bad loans, nearly double the 2-year average. Even adjusting, for this technical impact, so-called, it's still quite high. Gross NPAs highest in 6 quarters. Credit costs remain higher than peers, more than twice of its peers like HDFC or ICICI Bank, despite having a very similar loan mix to them. So that is triggering some concern on the street. I was reading a note from the likes of Suresh Ganpati of Macquarie on the street asking some very pointed questions. There have been these kind of technical credit costs and adjustments done in the past. If they are truly technical adjustments, where are the recoveries? Why do it now? Why not earlier? Could there be an underwriting or collection issue in the retail book? So these are the kind of questions that are being raised. And even beyond the asset quality, growth metrics seem to have weakened. If you look at the loan growth and the deposit growth, they've now been lagging the system average for multiple quarters. In the first quarter, we saw the credit growth was just about 8%, deposit just about 9%, again, underperforming peers. But perhaps, if you look at the numbers, the most dramatic reversal really has been in retail lending, which once was Axis Bank's key growth engine. If you look at the retail loan chart, if our producers could pick it up, from 27% kind of peaks in the third quarter of FY24 to just 6% in the latest quarter. So to just sum up, this long sort of description that I've been giving, there is operational stress, there is growth deceleration, and all this is coming in with a spate of senior level exits. So that does put the bank in an uncomfortable spot. So there are bound to be questions on what comes next.
All right. Very well explained to us. Thank you for that. Important to keep that context in mind, including, of course, the churn at the management level. Thanks for that, Ritu. Let's ask